Good morning, everyone. This is Team 37 Global Assets. Today, we will be talking about a major issue that the city of Toronto is facing. Toronto is a global city filled with vast opportunities, but many rapidly growing companies opt to leave the city and often Canada. This is a major issue as these rapidly growing companies lead to a boost in the economy with the number of people they employ. It is now important to look at how might we not only retain but attract economic talent in Toronto's innovation ecosystem. From the graph on the right hand side, it is clear that the outflows for direct foreign investment is more than $100 billion and the inflow is less than $40 billion. That means that businesses are opting to leave Canada and moving to different countries. So, what are the possible reasons for that? We will be also looking at those in the coming slides. Firstly, we will find out how Toronto is attracting new companies by comparing it to New York City. Secondly, we will look at those big cities like New York and Austin, Texas, and find out what are they doing to attract companies. Thirdly, we will figure out the reasons why businesses would leave these cities. And lastly, we will compare these cities with Toronto and identify the gap. One important reason that we found out why businesses are deciding to leave Toronto is because of the exponential rise in the real estate prices. Now, I would like to pass the stage to Nate, who will discuss about New York City and various other factors.
The reason we decided to compare Toronto to New York and Austin, Texas is the information gathered by MillionAcres.com. New York has seen the largest outflow of businesses leaving the city, while cities within Texas are seeing the largest inflow of people moving in. The reason why people are leaving cities such as New York are due to the cost of living, taxes, real estate, and regulations. In 2018, a study done by Biz2Credit, where they looked for the top small business city in America, they discovered that New York City was voted the best city for small businesses. New York attributed its success to the real estate market as buildings were rapidly being built. Today, real estate and taxes could be a setback for New York as real estate prices start to climb and there is a proposed $7 billion tax hike. Even though real estate prices are climbing, companies such as Facebook, Apple, Google, and Amazon are looking to expand their office space within the city, where Facebook is looking to triple their current local workforce. New York may have trouble keeping large companies in the future with this proposed $7 billion tax hike. In the past, we have seen a tax hike of this magnitude, and it led to 2 decades of fiscal problems along with rising crime and an unacceptable quality of life. Although this tax hike can run large companies out of New York, there are still tax benefits and incentives in place to help small businesses. Some of these include job retention programs, employee training incentive programs, a commercial tax credit program, and the best of all, a program called Startup New York, which allows new businesses to operate tax-free if they are located on or near certain universities in the state. In New York City, commercial tenants can pay upwards of $70 per square footage on average, and in prime locations, a lot more. In comparison to other cities within the US, this is a significant cost. It is clear that the demand for commercial real estate is increasing, and due to a relatively slower increase in supply, the prices for real estate have skyrocketed in New York.
Thanks, Nate. Now on to Austin, Texas. Despite the pandemic, Texas is the leading destination for companies relocating from other states, adding 1,000 new residents per day as people relocate to the Lone Star State. Austin, like Toronto, is a boom town, a term used for cities that is experiencing rapid growth. Austin saw a slight decrease in relocations and expansions from 2019, but the 2020 numbers are still impressive. 2020 proved to be the best year for attracting new jobs and new businesses to Austin. One of the biggest companies to relocate to Austin was Tesla. Construction of the 7.9 million square foot Gigafactory is well underway. When complete, it will be the equivalent of about 138 football fields and employ 5,000 people. Additionally, Apple continues to build its second campus in Austin. The 3 million square foot, $1 billion complex is also expected to employ 5,000 people. BAE Systems has been in Austin in 65 years. The International Defense, Aerospace, and Security Company is one of the first big tech companies to choose Austin. Home for BAE Systems is beginning to look different. The company is currently constructing a new facility of what has been a busy Palmer Lane in Northwest Austin. BAE Systems is hardly alone though. In 2020, during the pandemic, 109 Austin-based companies announced plans to expand operations, and 45 companies from outside of Texas announced plans to move here. That's 154 companies that announced plans to either relocate or expand in Austin. The average cost for renting and buying commercial estate is significantly lower in Austin as compared to New York, which suggests a reason as to why businesses are moving out of New York and into Austin, Texas. The office vacancy rate is a whopping 16.7% in the Bay Area and 15.1% in the Big Apple, and more than 30 big financial institutions are looking at properties for a possible relocation. Recently, Goldman Sachs began exploring its options for moving its asset management division to South Florida, which is an area north of Miami. And if Goldman Sachs moves, it wouldn't be the first player in the financial field to ditch New York City in favor of a warmer, cheaper, and tax-friendlier pastures. Because of COVID-19, several businesses have decided to remote work. Even though businesses are working remotely, office space is still needed for several back office works that needs face-to-face interaction. Business is remodeling their offices to adjust to this new change, and is a lot cheaper outside New York.
Thank you, Carl. So now I will be talking about the vacancy rates. The office vacancy rate rose to 2.7% from a record low of 2% in the first quarter of 2021. It is estimated that 650,000 square feet of vacant office space is still available for sublet. And in general, looking at the housing market, vacancy rates increased to 8.8% in Q1 of 2021 as compared to 1.1% in Q1 of 2020. So what can be done about this? Vacancy rate is not always a bad thing. Government can provide subsidies to growing businesses. That will not only allow Toronto to retain the growing businesses but also attract new businesses. They can give these offices at a subsidized rates to growing businesses. Secondly, they can create free trade zones. By creating these free trade zones, they can attract new businesses in Toronto, and they will be able to retain the businesses as their overall costs will reduce by paying less taxes. Thank you so much for the opportunity to present this presentation. If you have any questions, feel free to contact us. Thank you and have a nice day.